President Trump has introduced new tariffs on goods from many countries. This means that goods coming into the US from these countries will now be more expensive. Trump says this is to protect American businesses and jobs. He believes other countries have taken advantage of the US in trade deals. The tariffs are on a wide range of products. Some of the highest tariffs are on goods from China. These tariffs are on top of existing tariffs that were already in place. The goal, according to the Trump administration, is to reduce the trade deficit and bring back manufacturing jobs to the US. These new tariffs have created tension with many of America's trading partners. Countries like China, Canada, Mexico, and the European Union argued that these tariffs are unfair. They say these tariffs will hurt their businesses and could lead to a trade war. The stock market doesn't like uncertainty, and the tariffs have created a lot of it. After Trump's announcement, stock markets around the world dropped. The Dow Jones, a key measure of the US stock market, experienced its worst week in years. Investors are worried about the impact of a potential trade war. These concerns are shared by businesses large and small. Companies that rely on imported goods are worried about rising costs. They fear they will have to raise prices, which could hurt their sales. Farmers are concerned about losing access to important export markets. The price of oil also fell sharply. Oil is traded globally, and a slowdown in the global economy could mean less demand for oil. This uncertainty is reflected in the lower oil prices. China has already retaliated with tariffs of its own on American goods. This back-and-forth exchange of tariffs has raised concerns about a potential trade war. In a trade war, countries escalate tariffs on each other's goods, which can hurt businesses and consumers on both sides. Other countries are also considering their options. The European Union has threatened to retaliate with tariffs on American goods if the US does not back down. This tit-for-tat approach could escalate quickly and have unforeseen consequences for the global economy. The International Monetary Fund, IMF, has warned that a trade war would have a negative impact on global economic growth. The IMF argues that tariffs would disrupt global supply chains, raise prices for consumers, and could lead to a slowdown in investment and job creation. It is unclear what the long-term impact of these tariffs will be. Some economists argue that they could lead to higher prices for consumers and slower economic growth. Others believe that they could help to protect American jobs and businesses in the long run. The coming months will be critical in determining the course of this trade dispute. If countries can negotiate a solution, it could help to avert a trade war. However, if tensions continue to escalate, it could have a significant impact on the global economy. Only time will tell what the ultimate outcome of this trade dispute will be. However, one thing is certain: the stakes are high, and the world is watching closely.